What's going on, guys? It's Kuz. In this video, I'm bringing you a guide into supply and demand and why I believe it to be the best day trading strategy. If you found this video to be helpful at any point, consider leaving a like and subscribing. Let's get right into this video. So what is supply and demand? Supply and demand is essentially a relationship between the interaction of sellers and buyers of a certain resource. The laws of supply and demand show that when demand exceeds supply, it goes up. When supply exceeds demand, it goes down. And this could be used in your daily life, whether it's at the supermarket, when you're going to go buy something on eBay. So, a good example of this in today's world would be with eggs and how there is a low supply of eggs currently. So, this causes the price to go up. Essentially, supply and demand is a pretty simple concept, and it's what moves the stock market. It's not indicators, it's the auction between buyers and sellers, and whether buyers are stronger than sellers or sellers are stronger than buyers. That's how the market moves. How can we use supply and demand when trading? You want to be buying when majority of retail traders are selling, or vice versa. You want to be selling when retail traders are buying. For example, if a retail trader is trying to play a breakout and you see that this breakout is in a supply zone, rather than playing the breakout with the retail trader, you could short this breakout as there's a higher probability of your setup hitting because they are buying in a supply zone where price tends to reject to the downside. And the reason this works is because institutional traders are using significantly more money than a retail trader, which in returns provides a greater chance for the market to actually move in that direction. Institutional traders also aren't looking at the smaller time frames, such as the 1 minute or the 5 minute chart. They look at the bigger time frames and wait for a good deal. And this gives you an edge over a trader that is using lagging indicators. All right, so moving forward, emotions/anxiety is one of the biggest obstacles when it comes to trading. Every trader experiences some type of anxiety when it comes to trading, whether it's the fear of losing money or overall just being uncertain of what will happen. No one can 100% predict the markets, but when you have a proven edge, you can focus more on the trade rather than your emotions. Supply and demand provides a clear risk reward, a set stop loss, and a set profit taking level. In return, this reduces your anxiety, making you make less emotional choices and higher profits. So now let's get into drawing our supply and demand zones. This is the easy part. First, you want to go on your charting software. Switch to the higher time frame and move your way down until you reach a 30-minute time frame. And this is as you plot your zones on your chart. Look for a basing candle followed by a big move. The basing candle is a candle with a small spread and usually low volume. The smaller the wicks, the better. You now want to grab your rectangle tool and draw from the top of the body of the basing candle to the bottom of the wick on the explosion candle and drag it all the way to your right. Now you have a demand zone. You see the basing candle followed by the explosion candle. Now watch how price reacts when it comes into the demand zone. This is a place where you could look to get long off of or play calls. So when it comes for supply zones, you want to look for the same thing, just vice versa. You want to look for a basing candle followed by a big move down. Grab your rectangle tool and draw from the bottom of the body on the basing candle to the top of the wick on the explosion candle. And make sure this time you switch the color of the rectangle from green to red because this is where you will be placing your sell orders. As you can see, when price comes into the supply zone, it shows a rejection to the downside. How to trade when price reaches these zones. First of all, it's important to know that you need a lot of screen time with these zones. You must watch price and have an understanding of common characteristics of certain zones/candle structures. Unfortunately, you do not just draw rectangles and have a magical spot to buy and sell every time. You want to watch volume as price reaches your zone. Is there lower volume on green candles, a sign of weakness? Is there higher volume on red candles, a sign of weakness? Or vice versa? Is there higher volume on green candles showing strength? Is there lower volume on red candles showing strength? What is the background telling you? So, what I mean by looking at the background is telling you a story. Background is anything that's happening before price is traded. So, as you can see right here, we're on an uptrend, right? We're making higher highs consistently. Higher highs, higher highs, higher highs. And then right here where the supply zone is formed, we are no longer making higher highs. As you can see right here was the level of the previous high. So once we broke below this level, we were now in a downtrend, meaning that all the pops should be shorted. And when price came back into this supply zone, that would have been an area to get short because one, it's a supply zone. Two, the background is telling us that sellers are stronger than buyers now when the uptrend has been broken. Another scenario, so I could show you guys what background means, is in this example where we have a demand zone right here, basing candle followed by a big move up. We plot our demand zone. Now that our demand zone is plotted, we know to go long in this area because the background is telling us that we are making higher highs, showing that the buyers are currently winning the auction. This gives us a higher probability for playing the long side rather than playing a breakdown from this demand zone, which could happen if we made a lower low in this demand zone, showing that the trend has changed to the downside. Now you want to look at zone strength. How many times has the zone been tested? What do previous reactions tell you? Has price respected the zone? Zone strength is important. So in this example, I'm going to be showing you guys how zone strength played out in this trade. As you can see, there's demand formed in this area. Price came down to demand and showed a reaction to the upside. Came down to demand and showed a reaction to the upside. Now we know that this demand zone has been tested 2 times, meaning that it's going to be weaker on the next time it touches. So price trades and it comes back into this demand zone and breaks below. This is showing now that this demand zone is very weak because price was able to break below the demand zone. We were able to move up on a manipulation move, and as soon as we came back down to this demand zone, we broke below. Why did we break below? Because the previous price action is showing you that sellers were in fact stronger in this area of the demand zone because we were able to break below the demand zone. So now this zone is no longer respected. So when we came back into this demand zone, we could have played short to the downside and used it as a stop loss. So what you should be taking away from this video so far is that you should be taking less trades but higher quality trades. This will in return give you more profit so you're not just gambling and taking random trades. Zones unfortunately do not make you a fortune teller. Zones just give you an area of interest where probability is on your side. It's important to understand what is going on in the background so it could tell you a story of what's going to happen when price reaches a zone. Drawing your zones is easy, but reading them and using them correctly is difficult. Use a risk to reward ratio that makes sense. Screen time is everything. Price action over indicated. So finally, we're going to be going over our risk to reward levels and how we could plot them to take our trading to the next level. As you can see here on my chart, I plotted the demand zone and a supply zone. So now I'm giving an example of how we could place our risk reward levels on this supply trade. As you can see, we have a supply zone formed here, right? So now we got to look for entry in the supply zone. Our entry would ideally be at this level right here, where price showed a strong rejection in the past, which is the same level in the supply zone. We would place our stop loss in the supply zone before it breaks, and our take profit zone at the demand level. This gives us a 3.5 risk to reward ratio, which means that every 3.5 trades would make up for one losing trade. And this is ideal when you're looking to scale your trading and take it to the next level because a proper risk reward is the only way you can make profit, even if you're losing more trades than you're winning. So now let's show you guys demand zones. It's the same exact thing. You just want to flip over the concepts. You want to keep your risk inside of demand and your profit at supply. As you can see on this example, we're risking 13.5 points in our demand zone for potential 74 points at our supply zone. This means if we were to take an entry in this demand zone, we would only sell at this supply zone. However, I do suggest you to trim your profits based on signs of strength inside of these moves or signs of weakness inside these. You should never hold your full position until your target, and you should scale along the way. So essentially, that's how you go over your risk reward and how you plot your take profit levels and your stop loss. However, it's important to note that not everyone is able to risk the same amount of money. Everyone has a different risk tolerance based on how much money they have or how much risk they're willing to take. It's up to you to decide what you're willing to risk and how much profit you're looking to get. Something to also keep note of is that it's important to have at least a 2-to-1 risk reward ratio. This way you could lose more trades than you win and still be profitable. So that's pretty much it for this video. I hope you guys were able to learn something from this video and use it in your trading. I hope this helps you take your trading to the next level. If there's any questions you have, please leave them down below. Don't forget to like and subscribe. And thank you for watching. Peace out.